So Deepbridge was put together by myself initially 7.5 years ago after a career running NASDAQ-listed technology companies. It was put together to utilise the skill sets of a number of individuals instead of working within one organisation, was to use those skill sets across a number of organisations. So that was essentially how Deepbridge came to be. Twofold really. One is to act in the best interest of all shareholders at all times. And the second point is to help and guide companies to a successful conclusion. So we like to split the Deepbridge team up into 3 sectors. So we have technology, which is led by myself and supported by a number of individuals, primarily Matthias Muller. Matthias is ex-head of IT for manufacturing for Hewlett-Packard. We have Kieran, who's come from the financial side, but has a great degree of understanding of picking and choosing companies. And then we have life sciences, which is led by Savas. Savas has had a career both in industry and in financial services, and he leads the life science side. He is supported by a number of team members, namely Professor Chris Wood. Chris is a biotechnology entrepreneur who listed 2 companies on NASDAQ and was involved in the formation of Mediva, if people are aware of that company. And then from a financial perspective, that is led by our Chief Financial Officer, which is Gareth Groom, who's had a 20-year career in financial services. So across the whole team, we meet everybody's expectation in terms of the understanding of building a business to the understanding of the financial management that needs to take place. I think what makes Deepbridge unique is that the makeup of the team is that the vast majority of the team have come from industry and not from financial services. And that's because we fundamentally believe at the stage we invest, whether it be SEIS or EIS, it is more important to have a deep understanding of how you commercialise a product and how you build and develop a business than it is to just be a pure fund manager. High risk is exactly what it is. I think risk can be mitigated. We have to draw a distinction between SEIS and EIS. At an SEIS level, risk is mitigated firstly by utilising a team of experts, which we have, and secondly by taking your investment and utilising a portfolio service, thereby being in a number of companies instead of 1 or 2. At an EIS level, risk can be mitigated by investing at a later stage. So by investing in a technology company that has developed its technology, but simply lacks the physical and financial resources to take it to another level, means that we can mitigate risk to a reasonable degree. Having said that, it's still risk investing, it's still early stage, and it's still investing for growth. We break it down into the 2 teams, one for life sciences and one for technology. Much of the decision-making process is done internally, supported by an external investment committee. We look at companies that first and foremost meet our criteria, and we do not waver from that criteria. And the key element is the due diligence on the team and the due diligence on the technology. Can the team do what they say they can do? Are they capable of it? And does the technology meet our criteria, and does it have the global scalability? It's all about commercial reality. So Deepbridge invests in renewables outside of EIS and SEIS. It's a product for inheritance tax planning, and we believed it offered a highly credible, stable solution for investors in that we invest in a physical asset. We have highly credible people who pay us, one being the government and one being a grade A counterparty in an electricity company.